Today is April 6th, Wednesday, time for the Trade of the Week webinar. Your host tonight's going to be Steve Gomez, and assisting him will be Jamie Hodge. Two of our educators. Also helping out in the chat panel will be Barry Anderson, our trading room moderator. I'll also be helping out with questions there. The audience is muted. You might want to hold your questions if they're directly for the presenters until they decide to answer questions in the second half of the prezo. And we're going to get started in just a moment. Before we do, I have a question for the audience. Those of you who come to these frequently and know the drill, I launched a poll in your screen. You can vote using the buttons on the poll. Do you currently have an active Trade Ideas subscription or not? This helps us know how much into detail we should probably be going with different portions of the presentation. If we have mostly new people who are not yet subscribers and have not had training, we might go into more detail. Otherwise, we'll reserve that for if there's direct questions to that, to those points. I'll leave this open for another minute or two so the rest of you can vote. And then I have one quick follow-up question, and then we will start. All right, thanks for voting. It looks like we have an even 50-50 split here tonight. So those of you who are not active subscribers, we will be offering a discount at the end of the webinar, so you're going to want to stick around for that. So those of you who answered yes in the last poll, do you currently have an AI odds maker license? If you're new, you may not know yet, but to access the artificial intelligence and our backtesting module, they have the same permission, and it requires a one-time license purchase that gives you lifetime access to our high functionality, locks that in for you, as long as you also have an active subscription to go along with it. And I'll explain a little bit more about that toward the end of the webinar. Awesome. So it looks like most of you who are subscribers do already have the AI, which is great because I know they're going to be covering some components that are included with that. All right, so I won't keep you any longer. I'll go ahead and turn you right over to Steve and Jamie. Steve?
All right. Can everybody hear me? Just type in the question box if you can. Should be hearing me.
Sounds good over here, Steve.
And do we see my screen yet, or do I need to turn that on? Let me go ahead and...
Yeah, you still need to share that out.
Here we go. All right.
All right, we can hear you. We can see you.
We can see.
All good.
Great. All right. Well, welcome to the April 6th Trade of the Week, everybody. For those of you that don't know, this is a different voice tonight. My name is Steve Gomez, and I'm going to be taking over the Trade of the Week this week and probably in the near future. Dan has been hosting this up until this week, and he's asked me to take over the reins, and I'm happy to do so. I've got a lot of good stuff I want to share with you. A little bit of background on myself. Actually, before we do that, we do need to do the lawyer speak. Just to remind everybody the disclaimer that Trade Ideas is a publisher of content and data, and by no means should be considered as investment advice. We are not registered investment advisors. We are happy-go-lucky traders and hackers. Real quick here on the spiders versus Holly, I'll just show that. Holly had a really nice day, continuing to outperform the S&P. We'll touch on that as well, but I just wanted to highlight that. So let's go ahead and look at the agenda for what I wanted to talk about tonight. Again, I wanted to introduce myself and give you a little brief background, which I will do so in a moment. We'll do some current market recap and some sentiment ideas that I've been seeing and hearing and talking about. We will recap some of the trades that Holly took today. It was a good day, as those of you that followed happen to notice. And then we'll get into the meat of the content, which is the Trade of the Week. The Trade of the Week was sent out Monday morning to your email boxes. Hopefully everybody got that in time. We'll talk about that. And then I'll talk about maybe 10 or so other additional setups that I've got my eye on that are very similar to the type of move that we did see in the Trade of the Week this week. And we'll set some price alerts on those as well and discuss the rationale and reasoning behind the levels that I'll be selecting for those price alerts. And then as a bonus, for those of you that do have the premium subscription with the AI package, odds maker back testing, which of course includes the new price limit alerts, I'll go ahead and copy that cloud link out and post that in the chat window at the end of the broadcast. So those of you that can accept a cloud link on the price alerts can make full use of the work we're going to do here going forward. I've also dropped a link in the chat window. At the end of the broadcast, Scott will be handing out a really nice promo code for some pretty good discounts on the product for those of you that don't have the advanced functionality or even the base subscription. So we'll start with bio. Again, my name's Steve Gomez. For those of you that don't know, I've known Dan since 1998. I've known Brad since the 80s. We went to college together, so I've known these guys for a long time. Before the concept was even hatched for TradeX in 2002. And when the time came in 2002, Dan and his CFO, Phil, they came to me as an active trader and said, hey, Steve, this is what we're going to be building here. What would you like to see if we had a menu of alerts that would be something of interest to you? So I took them up on that right off the bat and helped them create a couple of alerts. And, it's probably worth noting that I am user number 3 in the Trade Ideas database. So I think maybe only Dan and Phil are ahead of me. I don't know, but number 3 is pretty old school. So I've been around Dan, Brad, and the product since the inception. Traded off and on since 1995, starting with commodities and futures, and then in 98 to the present moved into stocks, and that's where I met Dan and Brad in 1998. Beyond that, in I think about 2006, 2007, I did travel over to China with my trading and business partner. Some of you may know Andy Lindloff. We had a subscription service called Today Trader, and that is also my handle on Twitter, Today Trader. I'll show you that later. But it made us realize going over to China once a week for 1 week out of the month was really hard to keep in touch with the traders that we were working on over there. They wanted some Westerners to come over and help mentor their Chinese traders who were staying up all night in the middle of the night trading the U.S. markets, and so we had a contract to do that for about a year. And when we came back, we realized, we used a lot of desktop sharing software as that started to come into play at the time to keep in touch with our Chinese students. And then we realized this was just a great teaching tool. So in 2008, we launched a desktop live service so people could just basically pull up a virtual chair and watch us trade in real time and ask questions, very similar to what Barry's doing today. We did that for many years and then took a break and focused our energies on something that was called Ditto Trade. Ditto Trade was a service that allowed people to open up an account through the Ditto Trade brokerage and actually mirror their account trades to the actual trades we were doing through the same brokerage. And it had a dashboard that showed you what the trigger points were. And if a trigger went off and a trade was taken, well, everybody that was attached to that trade got in at the exact same price on the same fill. There was no slippage. It was pretty cool technology. And we did that off and on for, we did that for a full 3.5 years. And then we closed the doors on that after 3.5 years. We did outperform the S&Ps handily over that time. So we were very proud of that. And we did that primarily through what we called swing scalping. And that's the primary strategy I like to use today. It's not quite day trading or scalping. It's not quite long-term position trading. It's just kind of somewhere in the middle where once you do get that really nice juicy move, you can let it run for a day or two and try and ride that wave. And we will talk about a couple of those setups here coming forward. And then if your time permits, if we don't get to it this week, we can do it next week, but always a few charts that are of interest that people want to have me look at, and I'll be happy to take a look at a few charts if we have some time on the back end. So that said, let's move this out of the way and into our more familiar surroundings here of the Trade Ideas Pro platform. I'm going to use the Trade Ideas charts for many purposes, but I also want to use free stock charts because we don't have any moving averages quite yet on the Trade Ideas charts. They are coming, but I like to use moving averages, especially when making examples. And not only that, freestockcharts.com is pretty much available to anybody, so that's a good deal. You can get the same look and feel as what I'm looking at here. So let's do a little market recap, talk about where we are, and we'll look at the SPYs here first. As you can see, it's been a frustrating few weeks for the short sellers down here who maybe thought we were going to lows, because this has been quite the face-ripping rally, for lack of a better term. And then in the last few days here, we've had some action with some spotty congestion and pullbacks, but we're settling in here above this 200-day moving average, and we're still above our 20-day moving average. The yellow line is a 10-day moving average. I'm going to talk a little bit more about that. That's really the average I like to focus on for stocks that are in motion and stocks that are setting up nicely as well. But what I want to do is talk about, we can see where we've come from, but where are we going? And I started to notice a bit of a bias, and I'm going to show you that technical bias. I'm going to zoom out here a little bit, and we're starting to see a trend line come in on this daily chart that's pretty defined over the last year or so. And I'm going to actually zoom out even more. I'm going to go to a monthly chart, and you can see this monthly chart is even more well defined. Maybe 1, 2, 3, 4, 5, 6 different touches here of this this trend line. It's slowly sloping down. And so where are we going? Well, we've expended a lot of energy from down here, head faking the shorts, all the way back up to just under this trend line here. Now I really feel like this is a foregone conclusion. We're probably going to test this trend line. I don't know if it's going to be this week or next week, or if we're going to pull back a little bit and digest and then push through with some force. But I think it's a foregone conclusion that this trend line will be once again tested. And if I zoom out even more, let's go to a monthly chart. You can see a real historic perspective. I mean, this is where I started trading back here in 94, 95, and then 98 is when I met Dan in this area back here. So I have seen the comings and goings of many different cycles of different bull bear markets, seen a lot, just like Dan and Brad and the rest of the crew here. The reason I pulled out here for the monthly view is to show this line that I put in. It's very, very possible if, and a big if we fail at this line here, the worst case possible, I shouldn't say worst case, but, really bad case possible is if we enter into a bear market, which some people are calling for, prior resistance back here could become future support at some time. Now, I don't want to get way ahead of myself because we still have this upside resistance to deal with, but I fully feel like this upside resistance is going to be tested sometime soon. So this is kind of the range that we're working with here. I also want to bring into thought a little bit of social media. I'm very active on social media under the name Today Trader here, but the other night I was doing my homework and I was seeing this exact thing that I was just showing you guys. And then I go onto Twitter and I see 3 people in a row that I highly respect. The first one I'm going to go down here is JC. He's under the name All-Star Charts. He's a great technician, a CMT technician. I trust and respect to this guy and everything he has to say. And he pops up saying, hey, I'm starting to see more shorting opportunities in U.S. stocks for the first time since January. Oh, interesting. All right. And then shortly thereafter, the group of HCPG, another great trading group. I think there's 3 of them in all, and they do a great job of explaining what it is they're doing and how they do it. They came out and said the same thing. Hey, we're finding it tougher to find some new long entries, so we're just going to sit longer terms and be a little bit more patient here with our swings from last April. And the long pickings are getting scarce for sure. That's what I was saying to them in response. So I'm agreeing with them. And then here coming up at the end is another great trader, Sunrise Trader. I follow him as well. He says the same thing, risk here for the new longs. My homework is telling me the markets need to unwind. Patience, patience, patience. Once again, the word patience. So these guys that I respect are really seeing the same thing that I'm seeing. And this is kind of how I'm forming my opinion. Today was a wonderful push after the FOMC decided to not raise interest rates. And, I just think that we're going to continue to see a little bit of a bid and an upward bias until we get to these levels. Now, when we get here, I really fully don't expect us to go through these levels like a hot knife through butter. I expect, pretty good sizable brick wall, for lack of a better word. So I expect to see some choppiness and some attempts to get through this line. I just don't know when it's going to happen, but that is what I'm looking at for the longer term picture in our markets. The Qs are kind of the same thing. They're also above their flattening 200-day moving average and resting above their 10-day moving average, which to me shows a stock in motion. The Qs have been pretty much above their 10-day moving average for quite some time here. So very similar story over there. All right. yeah, we've got some guys here that can answer questions. If you have any questions going forward, they're certainly able to answer. Otherwise, if you want to hold until we get to the end, I fully understand that. Let me get back here. All right, so we did some market recap. We saw we've got some upside resistance coming up here pretty soon. We talked about the sentiment and who to follow and who I'm following on Twitter and why I'm feeling the same thing. I'm seeing the same things those guys are seeing, and I respect them. So that's my opinion. Let's turn over to Holly today. And Holly had an interesting day because, for those of you that follow a lot, there were 2 new strategies that were released today. Some of you tune into the webinars that I do with Jamie on Monday and Thursday, and when Jamie's not doing webinars and trading, he is a mad scientist at putting together some really unique strategies to feed into the hopper for Holly. And we call those base strategies. It's just kind of a base idea and that Holly takes and optimizes and tweaks and puts all the magic AI sprinkle dust on it and makes it work better. But today we had the debut of a new one here on long, usual suspects. This one has been testing extremely well. It came in at the highest of all the scores at 69.6% today, and it had only 1 trade, but it was a winner, and it was actually the best winner of all the trades today at $1.03. So good, good showing for the first one of the usual suspects. This other one here was also a winner today. It's called Moxie. And this one was also designed by Jamie. And so Moxie and the usual suspects are 2 new base strategies that we're real excited about, and they had a great debut on their first day. Both of them actually deploy something a little different than we've done in the past. They are using a custom watch list. And so there's an extensive amount of back testing that were done on those, and the stocks that came through the most working on that particular strategy wound up in the hopper for the customized watch list. In other words, these 2 strategies are not looking through the entire market. They're only focused on a handful of maybe 100 or a couple hundred stocks, depending upon which strategy. So that's something interesting and new as well. And again, they debuted today and they had a really good start. Happy about that. Let's take a look at some of the trades. One of the things I found really interesting was SRPT was triggered by the mob long, and it was also triggered this morning actually, and it was triggered very early on. If I double click that SRPT here, we'll be able to see that arrow right here very early on. This was a wonderful, wonderful move today. And again, reminding people, I think Holly got out around here. She got out because she has to. She has this timed stop and she cannot take things, into the end of the day. But we always remind people that the Trade Ideas AI engine is a gray box tool. It's not a black box tool. What do I mean by that? The black box tool is a black and white, in, out, everything is predefined, no touchy, walk away, don't touch it. But a gray box is more of a trade idea generation system. It serves up the trade in real time with the opportunity to take the trade and hold on to the trade as long as you'd like. Now, again, Holly has some suggested time stops and also has the smart stop. The smart stop is calculated on an individual stock basis based on each stock's propensity for volatility and volume and whatnot throughout the day. So I found it interesting that SRPT was found very early by this strategy, and by the way, the mob strategy tunes into the StockTwits data stream. So rather than looking for volume, we're actually looking for the metrics of social media mentions. And there was a lot of social media mentions this morning on SRPT, and the way this particular strategy was designed, it gave us a really nice early entry. But again, you did not have to exit one hour after entry when a stock is looking that good like it was. Interestingly enough, Moxie, the second one that I spoke of as a new debut today, also picked up on SRPT, but more towards the end of the day. But what's interesting is both of them were able to make money in the same stock using 2 different strategies, and I found that kind of amusing today. Also of note, when I talk about AI, I'm always paying attention to the directional bias that the AI has, and as you can see here, this short did not trigger, and this short triggered only 1 trade. Everything else was long today. And of course, knowing what the market did, was a good strong day for the bulls. Once again, Holly was on the right side of her directional bias. So whenever I see the AI taking a bias of all long positions or all short positions, I usually take note of that and make a mental note, especially in the morning, you know, when the data is coming out on our markets at 10 a.m. Eastern time. A lot of times I really have no idea which direction this market's going to go based on what I'm seeing. I'll look down and maybe see the AI get into 4, 5, 6, 7 shorts really quickly, and lo and behold, you know, more often than not, the market starts to roll over as Holly kind of picked a good direction. Another thing of interest that Jamie and I have noticed a lot is just right in the very beginning of each day when Holly starts firing off trades, there's really no direction. It's a lot of back and forth, and then eventually they wind up taking the direction. In this case, Holly had a pretty decent day. So that's it for just a quick synopsis on what happened with the AI today. If you have any more questions, you can type them into the window, and the guys that are monitoring the questions can take care of that for you. Let me take a sip off my alcoholic beverage here. All right, so the trade of the week, if you did not know, was IBB. I'm going to go ahead and type IBB into here. And one of the reasons we came up with IBB this weekend is we're usually looking for stocks on the trend change lubricant where we've got a stock that's down in the lower 1/3 of their quadrant and trying to turn back up. And what I noticed over the weekend, and the other guys noticed, is that a lot of these, almost if not all of these trend change lubricant setups were showing up as biotechs and pharmaceuticals, and a lot of them were, you know, lower float, lower value biotechs, but they all kind of had the same look. And we really wanted to create a trade of the week call that included the biotechs, but do it without so much risk. You know, one of the basic trading rules I tell people when they say, well, how do you mitigate overnight risk? Well, one of the easiest ways to mitigate overnight risk is to not hold a single biotech stock long overnight, or short for that matter. Because more often than not, you're going to get some crazy news after hours, and these are the kind of stocks that can gap away from you if you're on the wrong side of it, you know, 20, 30, 40%. So in the interest of trying to continue to keep low risk, high reward type entries, we selected IBB, which is the biotech ETF. And when it was selected, I'm going to zoom in here a little bit on Monday. Actually, I'm going to go back to my free stock charts here just a minute because I want to show you where the target could be for this. When we were looking to get in, we had already had this big up day. All right, this was Friday, Monday, Tuesday, Wednesday, today. We really didn't want to mess around too much. We wanted to get this trade of the week idea out as soon as possible. So we started writing it up, and when the email was sent out, it was about a 270 trigger, I believe. The stock did pull back a little bit intraday, but that was a good entry. However, the following day, it pulled back to like 267. May have given anybody who felt like they didn't want to chase or miss the train a possible chance to get an even better entry, and they could have. And then it did exactly what we hoped for, a nice follow-through push today. Very, very good movement today. So trade of the week, intact, huge volume. I believe there is more meat on this bone. I believe that there should be some follow-through tomorrow. And if you look back here where my crosshairs are, and these wicks back here, we're starting to come into some choppy areas. The first thing I do when you've got a trade either going for you or against you is to look back in history, see exactly where the prior points of resistance were, and try and locate a pivot. Well, I'm seeing maybe a first line of area here of resistance could be this pivot area of about 290. So it wouldn't be out of the realm of possibility to take off a 1/3 or 1/2, if we get to 290 tomorrow. That can be a very good psychological exercise as well. Some of you have heard me talk about that when we're trading, fear and greed get the best of us, and sometimes we actually fear that the stock's going to pull back without us, and we're going to give back, or going to pull back on us, and we're going to give back all that money that we see currently on our blotter. But we also have the fear of missing out. So selling a third or selling a half at certain levels, increments that make sense, always are a good thing, because they can really release some of the emotions that you have and free up a better trading mind going forward. You're not constantly in angst over should I sell, should I not, sell half, and you're basically satisfying both demons of greed and fear at the same time. So level number one, I do see some interest of selling possibly coming in around 290, and that could be a place to take off your first lot, and then you're basically playing with the house money, and you can afford to let things jig around a little bit more and back and fill. But if I zoom out a little bit, I've got a trend line here that's pretty well defined. I think that could be a secondary target, and this trend line might intersect up here like around 300. So just to give you guys an example of what I'm thinking, the 290 and the 300 level could be interesting levels to take profits where the targets lie, because that's where I feel that more selling interest is going to come in. A lot of these biotechs were short, and there's a lot of short covering going on here. Matter of fact, Jamie sent me a great article today showing that at this time in history there is really a big, almost if not a record amount of short bias. A lot of stocks having big short floats, and we're going to talk about that some more as well. But there's a lot of short bets going on out there right now. Whether they're going to be right, who knows? Maybe they're going to be right, but they're going to be early and have to sit through some pain. Well, that's certainly the case here in some of these biotechs, and I feel bad for those guys who are not getting out that are short. Just kidding. So what I'm going to do next is I'm going to bring up a couple of other stocks that are not on the watch list. We're not going to put an alert in them, but I want to show you what can happen when we get the right kind of movement off of the setups that we're looking for. The first one is ICPT. And I'm going to keep free stock charts up here just a little bit longer because I want to show, again, the moving averages and how I use them. And we are expecting the moving averages to be coming into the Today Trader charts, hopefully here in a matter of weeks. But for now, I'm just going to use this example. Here, once again, pharmaceutical company, all looking the same, but they're bouncing off their lows and trying to make a higher make higher lows and higher highs. And these are the typical trend change lubricant type setups that we try and catch down here early. Well, we had a nice breakout here and then a pullback, but kind of back into the range. So it was a bit of a head fake, but it didn't really matter because look at yesterday and today, just exploding. And what I like here is this sideways action. Most importantly, this yellow line here, like I said earlier, is the 10-day moving average. I always need to see the 10-day moving average supporting price as it's doing here. The more sideways it goes with an up bias, even better. Liken this right here to like a bird holding, like your hand, and you're holding a little baby bird in your hand waiting for it to fly. I'm not going to get excited about a chart like this back here where the 10-period moving average is suppressing price, suppressing. I'd rather see it stabilize, get into a nice narrow trading range, and then start to have that yellow 10-day moving average start to press the issue from the downside and force these shorts to cough up their shares and create a nice short squeeze. ICPT, so this is an imprint stock. Forget these last 2 days here, but this little setup right here is the kind of thing that I get excited about, and I want to imprint on you guys. Another one for a good example would be RPTP, excuse me. RPTP, typing. Okay, very similar, except today we had the big move today. I would have put this on our watch list today, but we are a day late because it moved. But you can see the very same thing. Nice sideways action. The price is not pulling back. We're not consolidating in price. We're consolidating over time, which is always preferred. Nice narrow range, but look at how that 10-period moving average is really supporting the underneath of the price. Price never closed below. Occasionally it might wick or trade below for a moment, but as long as it closes back above that line, I am interested. So once again, kind of like a hand holding a little baby bird, getting ready to take flight. Those are the kind of setups that I'm looking for. All right, so let's go back to our trade ideas charts, and I have pulled a watch list of a few things here that I want to focus on from the trend change lubricant, and also my short squeeze, and also one that Dan provided, which I think is a great one. There's it's called what is it? Where is it? Hidden gems. So these are some of the windows I pulled the alerts off of. I'm not just going to go down the windows one by one. I'm going to selectively go off my notes here because I have a few that I want to talk about. And then what we're going to do is we're going to set some price alerts, and we're going to talk about the wisdom behind the price alerts and what it is we're looking for. So let me pull up my price alerts here. And I've cleared out all my working ones. I want to start fresh. The ones I've had going here for the last week or two are still performing pretty well. Happy about that. But I'm going to go in here and I'm going to check working. I only want to see the ones that are going to be working, which are the ones we're going to add here shortly. All right, so let's start with a couple bios. I didn't want to focus all on bios, but like I said, these seem to be the ones that are shaping up. Start with INVN. All right, again, you can kind of see similar to the charts I was showing you earlier. And hang on one second. Just so you know, very similar, that 10-period moving average, we didn't close above it. We did close above it, even though we tried to run some stops. It's still in play as far as I'm concerned. So any of these stocks that I'm going to show you here without the moving averages, just assume that they are in play as far as I'm concerned. I think the easiest place to set an alert here is going to be 857. And 857, excuse me, 857, where's 857? I think what I meant to do was about just above this high and this high here, because what I can do is I could wait for it to clear out and take out the top of this wick. But my thinking is the way the short float is and the way these biotechs have been going, I'm going to go for option number one, which is the high of these earlier wicks. So my thinking is if we're going to take out either this high or this high, we're looking good. So that high is 850. This high is 849. So we're going to go ahead and right click right around 851, which is a penny above that high earlier. And there's my price, 851. I'm going to give myself a note, get an early start on this one. One of the things I like about the notes is, as you know, the market's closed and Trader Steve is sitting here with his alcoholic beverage and no real stress. The markets are closed. I'm seeing a more zen picture of what it is I'm trying to do. And I'm creating these alerts with a clear mind. There's no money on the table at the moment. There's no emotions. You know, as hard as we try as humans to not be emotional, it's still hard to keep those emotions out. So I always like to maybe give myself a little note of what current Steve is saying to future Steve when the alert goes off and the bells rung in the markets, to try and remind myself of what it was that I liked on this one. And on this one, I want to get a head start, an early start. So I'm going to go ahead and set that alert. And you can see that red line pops in there. It will stay red until the alert is triggered. That's INVN. FIT is one that we've been talking about, and for good reason too. It's got a unbelievably huge short, up in the 80% short, if that number is even right. I don't even know if that number is right, but regardless of, anything above 50 is insane in my book. Now FIT, we had a nice little opportunity to try and move and follow through earlier, but it didn't. It failed, and it fell back in and probably stopped out a lot of the people that had an entry in this area. But it's back for more, and it's back for more on some really good volume down here as well. And it's starting to create a nice little sideways action. And again, I'm going to do the same thing I did on INVN. I could set my alert above this wick, but with all that short interest, I want to be the early bird that catches the worm on this one. So I'm going to go ahead, I'm going to use the second highest wick, which looks like to be 1575. So I'm going to go ahead and go to about 1575. Perfect. I'm going to create that alert right there. And again, early shot at new highs. Now, when these alerts go off, guys, you know, it doesn't necessarily mean that you turn around and grab your full size and your full risk of share size and just blindly buy it. Watch the price action and see how the price action, you know, responds at certain levels. What I like to do, and my trading partner Andy also likes to do, is just, you know, throw up 50 shares or throw up 100 shares or whatever is a real small nominal amount that's only maybe 10, 15, 20% of your total trade size that you're going to allocate for each trade, and just buy it or short it, whatever your alert's telling you to do, and that gets it on the radar, you know, because there's only so much time in the day that you have that you can focus on stocks, and you guys will probably realize it's real simple to just start getting sidetracked and overwhelmed and just chasing charts and typing in symbols. If you want to try and keep your intent focused, nothing like putting a couple dollars on the table and getting some skin in the game. That'll get you to focus real quick. So we call it just putting it on the radar. So when an alert goes off, you know, just putting it on the radar with a few hundred shares or a few shares, whatever it is to you, is good enough to make sure that you're going to stay on top of it and babysit this and start to realize what the levels are, where the buyers and the sellers are showing up. So that's always a good thing that I try to preach is, you know, scaling in and scaling out. It's not averaging in or averaging down. I should say averaging down or doubling down. That's wrong. You know, if your risk tolerance is not to lose more than $250 on a given trade, well then you should be scaling in and should always have a downside stop level that would equate to $250 or less, no more. So you're defining your loss not only on the dollar amount that you don't want to lose, but also a technical level that computes out to that dollar amount, so they both you know, so they both jive. What you don't want to do is pile into the full amount and then get, you know, confused and scared and then double up to your, you know, risk amount. That's doubling down. I never ever am a proponent of that. I'm always a proponent of scaling in, and like I mentioned earlier, scaling out is the same thing on that IBB trade. If we're lucky enough to get, you know, 290 tomorrow, scale out, take some off the table. It doesn't all have to be black and white, in or out all the time. Okay, on to the next one. We've said a couple so far. The next one is CAA, and let me zoom out a little bit on this one. All right, CAA, I'm thinking about doing at 34.08, which is pretty much above the high of today. I've got enough sideways movement here that I like, some higher highs and higher lows, good 4 or 5 days of kind of sideways congestion here. But I think this one may be ready to go. I don't really see anything other than today's high to set an alert for this one. Today's high is 34.07, so let's just go to 34.08. See, I can do 34.07, and then I can correct it in here, adjust the price. Nothing much to say about this one other than breakout. Okay, we've got that one established as well. Next one I'm going to look at is NMBL, Nimble. This one's been beaten up, but it's been trading sideways for a while down here. I really like this sideways action. And again, the CAA that I did a minute ago, I forgot to mention, had like a 38% short float. This one, Nimble's only got a 13% short float, so that's not really in the equation. I don't really start to consider short float percentages anything of significance until you're about 15 or maybe 20% to try and create a an event that would be a nice short squeeze event. So on this Nimble, I've got it at 844. You know, the high today was 834. The high going back here is 843. So this is the high I'm going to key off of. I'm not going to try and get an early jump on this one. They're just too close. So I'm going to go what did I say? 844. I'll just right click that and adjust the price down to 44. And tight consolidation, ready for pop, question mark. All right, what next? EYES, EYES. I like this one as well. Let me try and get some perspective. Okay, back here we must have had a really nice short squeeze event, and we had two solid days of push. So as far as I'm concerned, they've given back and digested all that it really wants to. It's built a nice base down here and trying to move higher. Now today, it would have been really nice to see this stock close on highs, but it didn't. So what was my thinking on this one? I've got it at 580. I'm just going to basically look at this wick right here. The top of that is 578, and the top of today's wick is 579. So I'm going to use those two goalposts there. I mean, we're pretty close to it. It may take a couple days to chop back and forth, but I do want to know if this one gets back above 580. So I'm going to put in 580. Okay, this is an interesting one, Shake Shack. This one was a trade of the week last month and had some nice meat on the bone. And then here's a perfect example of reminding you guys of when earnings are, when our earnings. You know, what I always try to do is just check my single stock window, because what I've done is I've added the earnings date. And if you're not aware, the earnings date on any single stock window, you can right click, configure, and throw in any filter you want to take a look at. And so in this case, I threw in the earnings date filter. It's got a negative 21, so it's negative 21 days past its earnings. Safe, clear sailing. But this is when the earnings took place down here. And you've got to know when the earnings are, people. You've got to know, because that's one thing you can control. You can't control overnight news or things that, you know, surprises, you know, earnings warnings, downgrades, things that come out of left field. But what you can control are known events, things that you do know, and earnings dates are very clear, and they're one of them. So if you were coming in here and you knew very well that earnings were coming out here on Shack, which is a stock that's highly shorted and probably has some issues, but still, we're going to focus on the price action rather than what we think about the fundamentals. This gap down should come as no surprise. If you're going to sit through earnings and risk it, then this is what happens, you know. I do not like to play stocks into earnings. It's basically gambling. I'd rather just keep the edge in my favor. And so knowing that earnings came up, we had a pretty big gap down, but this one has recovered. Popped up, look, a nice 4, 5, 6 days of sideways movement here. Let me actually put this, yeah, this one is worth looking again on the moving average side. You can see that 10-period moving average is holding the price once again from below. So I'm getting interested again, but we've got a nice simple range here, and I'm just going to use the high end of that range, which should be about 37.84. Right about there, perfect. So I'm going to grab this and set this for a second play, Shake Shack 2.0. Second move, question mark, above that price. We'll know when it comes out. All right, so we're getting our price alerts going here. And again, at the end of the webinar, I'll be happy to cloud link that and share those links with those who can accept that cloud link. You basically have to have the premium membership functionality, which includes the Holly AI, the back testing, and of course our new price alerts now, to be able to take advantage of that sharing feature that I will do. All right, what's next? We did Shake Shack. Found one that caught my interest called Hain, H-A-I-A-N. Really, really building nicely off that base. This one has a nominal short squeeze. Oh, and by the way, Shake Shack still over 70% short the float. Very much worth mentioning on that Shake Shack. Matter of fact, let's do this. Let's go back to our price alerts, because I need to remind myself that. This is the reason for using the notes section. What happened to Shack? Did it trigger? I think something happened on that one that didn't work right. Let's reset that one. I must have done some user error on that one. Yeah, somehow that triggered. Let's go ahead and move that. There we go. I've unselected it. Now I'm going to go down. I'll go 37.85. And there's my Shack. I want to edit this price alert. I want to remind myself, all caps, yelling at myself, over 70% short float. So I'll see that, and I'll remind myself, hey, you know, present tense, non-emotional, alcoholic beverage drinking Steve noticed it here. When the game is on, make sure you don't forget that this one has a huge short float, and that's one of the reasons you're liking it. All right, back to that one working. Let's go back to the Hain. So again, a really nice change in direction on this one. You can see it's already broke its trend, kind of just sliding higher. I'd rather see it sliding sideways, but still, it got my attention. And on this one, I'm going to have to put my alert at 42.55, which is essentially the high of today's. I need to put my crosshairs back on. I like my crosshairs, which is essentially the high of today. And if you look back here, there's a high there. There's some highs back here. So looking back in the history, I'm identifying a really nice pivot point that looks just above the highs of today. So let's double check the highs of today is 42.54. We're going to go 42.55, right click, and create price alert. Breakout recent high. All right, a few more of these. OUTR, I kind of like this one too. It is a, is that the right one? Outer. There we go, Outer. It's a specialty retailer. Obviously had some bad earnings or some bad news down here, but it's worked itself off. Created a nice base after backing and filling this little gap here and slowly starting to move higher. If I put Outer on, it's behaving above its 10-period moving average. That's good too. This was alert that I had earlier today that did trigger, but I think there is still some more meat on this bone. So we're going to go ahead and set another alert at 39.88. Second alert. All right. Couple more, two more. Rack Space used to be a high flyer back in the day, but looking like many of our trend change lubricant stocks, it's basing and trying to turn back up. Now what I'm going to do on this one is we're going to do something a little different. What I don't want to do is be the guy who's chasing 1, 2, 3, 4, 5, 6, 7, 8, 9 green bars before I decide to make the entry. That's really running with the herd, if you ask me, and there's no better way to get chopped up over the long term in trading, especially this market dynamic, when you start chasing and running around with the herd. You've got to have a little bit of contrarian to you, and we can use some contrarianism in our entries. So far we've just set alerts coming from below and pushing up above. Well, on a stock that's interesting in the bigger picture, which this certainly is to me, I'm not going to come in here and chase this level, but I do want to know a level of interest if it does pull back. And on this one, I think I'm using the low of this bar here, which is 22.38. Yeah, I'm going to use 22.37. So I'm going to think the logic behind this one is, and I'll just bring up the intraday chart on this one as well. Actually, no, I'm just going to make it simple. We use the daily chart. You can use just enough of an example. I think the low of today's bar was a really nice move, but if you wanted to frustrate the people who bought today's bar, and the market has a way of finding out how to frustrate those, and it very well could, try and shake out and run the stops below the low of this bar, which is 22.38. So I'm going to set an alert at 22.37. And I'm just going to watch. If this alert goes off, these are classic ones where you can maybe buy 50 or 100 shares just to get it on the radar and watch it. Maybe you add to it the following day, but it starts to get you in the game and get you in the feel for where the support, resistance, and the buyers and the sellers are lurking. So let's go ahead and do this 22.37, right click. 22.37. It's not going to be a short. I'm going to have to change this. This is very important, guys. It thinks because I'm putting the alert below that's going to default to short, but I'm not. I'm saying I want to be alerted for a possible long trade. The reason that's important is because if the trade does go off, you want your P&L calculating the correct direction so you can have a good measure of your performance and how your entries and exits are. So we're going to call this pullback, maybe by just a little to put on the radar, and I'll know what that means when that alert comes up. Long trade, currently above, if the price falls to, and there it is, there's our red line. So not going to chase this, but I am interested in this bigger picture. I just want to wait for a little bit more concise, patient, consolidated entry, and I might be interested in that one. Let's do one more here, Solar City. And again, this is going to be another example of one that I don't want to chase. Solar City, by the way, also has over 40% still short the float. 41% people betting against Elon Musk. I don't know about that. But let's look at the footprints in the sand and see what the tracking stuff is telling us here. Pretty simple breakout. You can see we broke out above this little wick going back, but the problem is there was no follow through. So that tells me there may be a little bit of pain involved for the people that try to buy that breakout. You're probably in for maybe a day or two of some shakeout. Maybe, maybe not, but I'm not going to chase it up here. So once again, I'm going to do the same thing. 26.51 is what I'm going to do. The low of this bar is 26.60. Yeah, I'm going to stick it just maybe 9 or 10 cents below, thinking that it might go to the half number. And again, the same philosophy. Looking for a pullback to examine when it goes off. So I'm going to change that to a long because the price is behind us. And watch action, maybe buy to get on radar, small size. This is my current thought, trying to convey that to my future self. So there is another way to use the alerts, not chase, and again, I tell people all the time, the entries that you take can really help get you a lot more staying power in the markets. You've only got so much wiggle room that you can expend before you've got to cut a trade loose and take your pain, the Band-Aid off. But the more contrarian you can get on your entries, in other words, when other people are selling and you see a reason to buy, and you step in and buy and you get that bounce you're looking for, you've already got a really nice, comfortable area beneath you to withstand a good stop loss. Because I'll tell you, the algos and the market makers, HFT, that run this market these days, they just seem to collectively have a way to try and find out where the biggest point of pain is for the short-term traders and find a way to move the prices to those levels in the interest of running stops. And that's where a lot of those HFT algos make their money, is running stops. And so if you can identify areas where it's clear that they just ran the stops on those poor people that chased it, think about flipping the hat over and becoming a buyer and take their pain off their hands and make that your gain. So that's the thinking behind a lot of these pullback type alerts. The better the entry you can get yourself.
If I could interrupt for just 1 second.
Hello, Jamie.
Hey, Mike was asking about Shield, and I thought this would be a good example of not something that's really developed yet, looking at that long term.
Yeah, let's take a look, because Shield is a disgustingly short stock. I'm going to go back to my #1 guide. Now back here, Shield was very interesting to me, and if you followed me on Twitter, I was talking a lot about it, especially this day right here had a lot of interest. Why? Because look, it was setting up like that bird in the hand type look with the 10-day moving average supporting price, getting ready to let that birdie fly. Well, that birdie couldn't fly. The shorts got a hold of it again. And as far as I'm concerned, it's guilty until proven innocent once again. We've got this 10-period moving average pushing down and pushing down from above, suppressing the price. I am no longer interested in Shield. I was interested in Shield back here, but I am no longer interested in Shield here. It's very compelling that you have some crazy, 80-90% short the float again, but what I think and what the footprints in the sand are telling me are two different things here. The footprints in the sand are going to take priority, and they're telling me that, nope, this is being marched back down, the sellers are back in control, and the moving average is making this particular setup guilty until proven innocent. Once again, thanks for chiming in there, Jamie. I've been on the flow. I haven't really been looking at the questions,
Hey, no
but
problem.
I appreciate that. If you set a long alert for price below, wouldn't it fire immediately? No, that's because I switched it over to the short trade. Steve G, what is your Twitter handle? I'll show you that in the last slide, but I'll go ahead and type that in here just in case. It is Today Trader, and the other ones I mentioned, I'll quickly show you again. Let me do that real quick, maybe for those that are also watching this on video replay. I highly recommend @SunriseTrader. I highly recommend HCPG. I highly recommend my buddy JC Peretz at All Star Charts. These are great, great resources. If you're not following them, please do. And the reason I brought this up earlier is that we were all three seeing the same thing, all four, including myself, seeing the same thing on the same Friday evening or Saturday evening doing our homework. Yeah, so those are the 10 trades that I have set price alerts on. So now what I'm going to do, I'm going to show you guys real quickly how we can share these. I'm going to highlight Shift key. I'm going to right click. I'm going to share these 10 selected price alerts. I'm going to copy them to my clipboard. And now I'm going down to the handy dandy chat window, and I'm typing and pasting in that cloud link, which is now in the chat window. And right above that is also the price list window, easy for me to say, for the advanced functionality, the premium subscription of AI Holly and back testing, which we'll do another night for just for educational purposes. So for those of you that can accept that functionality, it's there waiting for you in the chat. Somebody's asking a quick question. I'll take one chart because we're going to go here pretty soon. Somebody's saying SCOR has some nice sideways. Let's take a look. Yeah, that's interesting. I still would like to see this 10-period moving average more of a supporting role rather than just driving through the candles, but this could be the beginning of something developing there. For you, Leon. And EGL was another one you asked. This one's a little bit better. I like this one a little bit better. Matter of fact, you know, it might even be worth setting a price alert above this recent high here, 1904, for anybody who is so inclined to do so. But that's looking a little bit better. I like that one. Yeah. All right, well, I'm a little bit talked out, and I'm going to turn it back over to Scott to show you how to save a ton of money if you're on the fence, on the sidelines of thinking about upgrading to the one-time only lifetime premium subscription, which will give you access to a lot of the really cool stuff that is coming forward here in the near future. I'd like to thank Jamie and Barry and whoever else was helping me in there answer all those questions. Again, this will be recorded. I will bring the slide back up here for Mr. Scott so he can talk to you about some cool deals.
Yeah. Hey, Steve. Thanks for the good prezo. That was excellent.
Thank you.
I want to draw everyone's attention to their handouts panel in the GoToWebinar interface. Just for a moment, there's a PDF there waiting for you. It's got some of this information also, so it'll be easy for you to reference later. We're a software as a service company. Our core is our monthly subscription. It's $99 a month, and that includes all your real-time data and the exchange fees, our charting, which we launched last year, and a full hour of one-on-one training with Steve or Jamie. As soon as you subscribe, go to the support section, click on training, pick your best time and day, and we'll hook you up. Of course, you can also get the same thing for a year at $888, and that saves you a bundle over the $99 per month. And with both of those, there's no contract. You can go month to month or year to year. The AI is a one-time $1,100 cost to get the AI channel and the odds maker that lets you backtest the entire market, optimize your own strategies, or use Holly and our price alerts and all the new functionality that we've been building into it. That comes with the AI. That's a one-time lifetime purchase, and all you need to go along with that to get everything is an active monthly or annual subscription. So if you've downloaded that PDF already, you've seen what's on the next slide, which is a product code, Holly6. It all has to be in caps just like you see it on the screen for it to work on the checkout page. But what that does is it lets you get the first month for half off. $49 for the first month, renews at $99. Get into that hour of free training. It's more than worth it. You can get 20% off your first year. So this is a great way to upgrade from if you're on the $99 a month plan, get into the yearly. It saves you a bundle. And you can get that for $710 for the first year, and then it renews at $888, and you get to take 30% off the lifetime AI odds maker license. So you can upgrade into that for just $770 using this code. This code Holly6 does expire at the end of business on Friday, just so you know that. And we've also made it real easy for you to pick up everything together at once. So if you're currently on the monthly plan and you want to get everything now, or if you just want to jump in and get everything now, using the same code Holly6 on checkout from this link lets you do all that right away and saves you over $500 right away. So you can get the full year, which is $888, and the lifetime AI, which is $1,100. So that's $1,988 value for just $1,480. It's over $500 in savings. You can click on that link in your handout that you just downloaded, or type bit.ly/HollyTT, HOLLYTT, into your browser just like it is. It's case sensitive, so you do have to have the Holly TT all caps. And that works, takes you right to that page where you can purchase, and makes it real easy. So if you have any questions, if you'd like to know a little bit more about any of the things you saw, you can email us, info@trade-ideas.com. Follow us on Facebook, facebook.com/tradeideiaspro. We sometimes post special things there, new information. You can follow Steve, he's Today Trader. And Trade Ideas 1 is Dan Merkin. Thanks, everyone. There'll be a recording of this up later. You should get an email with a notification when the recording's up. Thanks, y'all. Thanks, Steve. Thanks, Jamie.
All right.
Yeah.
Thank you.
See you tomorrow.
See you tomorrow with Jamie.